Imagine this. You walk into a bank. You deposit your money. You feel safe, secure, smart. But what if I told you, the moment your money hits the bank, it stops being your money? In fact, your bank might be using your money right now to make millions. And here's the crazy part. They don't just make money from loans. They don't just earn from interest. They have a system, a hidden machine that quietly prints money every single day. And once you see it, you'll never look at banks the same way again. Let's start simple. What do most people think banks do? They think you deposit money, the bank gives loans, the bank earns interest. End of story. Sounds clean, right? But that's only the surface. Because banks don't just hold your money, they multiply it. Think of a bank like a magic box. You put in $1,000, but the bank doesn't keep it locked away. Instead, it lends most of it to someone else. Let's say you deposit $1,000. The bank keeps maybe $100 and lends $900 to someone else. Now here's where it gets weird. That $900 gets deposited into another bank, and that bank does the same thing again. It keeps a small portion and lends the rest. So your original $1,000 turns into $2,000, $3,000, even $10,000 in the system. This is called fractional reserve banking. But don't worry about the name. Just understand this. Banks create money from money that already exists. But wait, it gets crazier, because this is not even their biggest money-making trick. Let's go back in time for a second. Hundreds of years ago, banks were simple. People gave gold, banks stored it, they charged a small fee. That's it. Safe, boring. But then, bankers noticed something. Most people never came back to take all their gold at once. So banks thought, what if we lend some of this gold and earn money? That small idea changed the entire world. Fast forward to today, banks are no longer just storage places. They are lending machines, investment giants, fee collectors, and sometimes risk takers, all using one thing: other people's money. But here's the real question. If banks are using your money, how do they stay safe while you take the risk? Let's break it down even simpler. Imagine this. You give your friend $100 to keep safe, but instead, he lends 90 of it to someone else and charges them interest. Now your friend is making money from your money, and you might get almost nothing. Sounds unfair, right? Well, that's exactly how modern banking started. But don't get it wrong. Banks are not bad. They're just playing a game most people don't even know exists. And the deeper you go into this game, the more you realize loans and interest are just the beginning. Because in reality, banks have multiple secret income streams, some obvious, some hidden, some almost invisible. And the biggest one? Most people never even notice it. So now you understand one thing. Banks don't just store money, they use it. But here's where things get interesting, because lending money is just the entry-level game. The real money, it comes from places most people never look. Let's start with what everyone knows: loans. You take a loan, you pay interest. Simple. If you borrow $10,000, you might pay back $12,000 or more. That extra $2,000, that's profit for the bank. But here's the twist. Banks are often lending money they don't fully have. Remember earlier, that $1,000 turning into $10,000? So when they earn interest, they're earning on money they created inside the system. It's like selling something you barely paid for.
But even this is not their biggest income stream. Now think about this. Have you ever paid for ATM withdrawals, account maintenance, late payments, credit card fees, SMS alerts? Seems small, right? $2 here, $5 there. But now imagine millions of people paying these fees every single day. Suddenly, those tiny amounts turn into billions. And the scary part? You often don't even notice it. Banks design these fees to feel invisible, like a slow leak, dripping money out of your account. Now this is where things get powerful. This is called the spread. Here's how it works. The bank gives you 3% interest on savings, but charges someone else 10% on a loan. That gap, 7%, that's pure profit. And they do this at massive scale. Millions of accounts, millions of loans. That small gap becomes a money-printing machine. But wait, this is still not the craziest part. Banks don't just lend money, they invest it. Your money might be used for government bonds, stocks, corporate deals, real estate. These investments can generate huge returns. But here's the catch. If they win, they profit. If things go wrong, the entire system can be affected. This is exactly what happened in 2008. Banks took big risks, loans failed, investments collapsed. Banks realized they were sitting on a ticking bomb. One by one, they started falling. People lost homes, jobs disappeared, markets crashed. And here's the shocking part. Banks were too big to fail. So governments stepped in. They printed money. They saved the banks. So now you see the full picture. Banks create money, earn interest, collect fees, invest your deposits, and run on trust. They are not just a business, they are a system, a very powerful one. So what's the takeaway? Banks are not your enemy, but they're also not your safe box. They are businesses, and their goal is simple: make money. The smarter you understand their game, the better you can play yours. So next time you take a loan, use a credit card, pay a fee, or deposit money, ask yourself, who is really benefiting here? Because the truth is, the bank is always working, even when you're not. If this changed your way of seeing money, make sure you subscribe for more, because this is just the beginning. Next time, we'll break down something even crazier, how money itself is created from nothing. And trust me, that one will completely change your mind.